Right, Backtest Fridays, Volume 1, Episode 1, whatever, but let's get into it. So, we're going to be breaking down four pairs: Gold, Euro USD, NZD USD, and GBP JPY. Reason why I'm not doing GBP USD is because I prefer to trade GBP JPY over GBP USD, and it's basically the exact same thing. Check the correlation, don't be lazy, research it, you'll find it out. Alright, so I have this line right here on all the charts to indicate where the week started, as we will be only breaking down moves that happened this week. Alright, so observing on the daily, we have some clear information presented to us. First key piece of information is that we had a failed rejection of this level of broken support turned future resistance last week. Anticipation within the market was that this was going to happen, which it did not. So yeah, let's get this out of here. So the next obvious area where sellers would look to enter the market off of the structure transition that happened right here is at this area, right? Key: broken support, future resistance, simplicity. So looking at the market from the 4-hour time frame, this is where the market opened, and this is our daily level of support, broken, retested, which confirmed it as resistance. So identifying on this area right here, when we have this bullish candle, this decision candle right here, this is heavily bearish, by the way, guys, and then this bearish candle right here, right? Identifying what is happening on the small time frame is very important as it relates to entries, because within my trading style, I love low risk to high reward, and I love those sniper entries, those weak entries. Like, let us expose you to much less risk within the market. So we've identified this area on the H4 resonated from the daily time frame. So we drop down to our M15 time frame and actually see what's going on the small picture. So we identify we have this area right here, which is maintaining the structure on low time frames. Like here, here. Actually see we have a floor right here also, right? Price broke this floor, came up, tested back the floor, came up. We had this heavy bearish candle right here that completely took out this floor, because initially this would be considered as a tested area, and this also as a tested area, but this area along right here showed a complete break of this area. Let me highlight it for you guys so you can see what I'm talking about. This right here indicates a break. Now, every candle is telling a story, guys. Every candle is telling a story. I cannot stress this enough. And the story that is being told right here, re-order book correlation, is that sellers dominated this area, right? Buyers tried, sellers took back control. Buyers tried, and sellers took back control. At the close of this candle, right here, this completes a bearish variation on a broken level of support over here, turning resistance. Simplicity. Broken support, future resistance. Doesn't get simpler than that. So upon the close of this candle, you could take entry opportunities with the stops above. You can either use stops here or stops here. I personally like to give my trades room to breathe, i.e. this is gold, so we'll move the decimal point one place to the right. This would be a 38 pip stop loss, and we go on our higher time frame to find levels of support which we would look to take profits. So selling off this specific level in the market, we would look to take profits either here or here or here. So we can have a situation where we have, let me get this out here for you, a TP1, right? TP1 would be right here, TP2 would be right here, TP3 would be right here. Let me alter this. 2 and TP3, simplicity. So our risk to reward will be looking something like this. So we risked 38 pips and our reward was 253 pips if TP3 was hit. If TP1 only was hit, it would be 148 pips, and TP2 would have been 202 pips. Simplicity. Easy trades, guys. Very easy trades. Alright? So moving on to Euro USD. Wow, this was a crazy drop right here. But starting of the week, starting it off on the daily, looking what we're being presented with, we had a trend line right here, which bearish momentum kicked in at the rejection of this resistance and trend line. Week started at the same line, so we jumped down to the H4 time frame and we see what's up. So with the market opening right here, the only information we had is these wicks right here and this candle body closure right here, indicating some form of resistance within this area. So moving down to an even lower time frame, we identify that there's some form of H1 resistance that created this bullish push, bearish push, bullish push, and then sellers took control. So we take advantage of this entire information right here. So we're going to put this as price action, because price action is very important, right? So throughout all of this candle close right here, this formation right here, gives us a confirmation that there's some form of level of resistance along right here. That's the first level of resistance the market gave us to work with. Guys, when trading, you have to be adaptive. We cannot wait for the market to come all the way up here to start trying to find levels of resistance. Levels of resistance can be created at any point in the market. Your responsibility as a trader is to identify these levels. Like, come on, it's in front of you, right? So H1 time frame gave us this level of resistance, which was confirmed here, right? Also on the M30 time frame, I noticed this pattern, right? Interaction, 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 break, and perfect retest. Like, we don't need to even go to a further a lower time frame. And even indeed, let me show you something. This also was in play. This also was in play. I think it's on the H1. Yeah, here it is. This was also in play. Look at that. Easy trades, guys. Entry opportunities all along right there at the close of that bearish variation. We'll get out our risk to reward. If we're looking at the market from the M30 time frame, we would have entered on the close of that variation, that bearish engulfing. Stops above the H1 level of resistance, 17 pips. I would personally use about 25 to 30. Give your trades room to breathe. Now let's identify areas which we would have looked to come out of the market along that trade. So the first area we would look to enter the market, exit the market, would be our TP1 around right here. We have a TP2 somewhere along right here, and ultimately a TP3 would be down here. And what I noticed about this Euro trade, oh, shit's getting packed right here. I don't even like so much lines on my chart. This is ridiculous. At no point in time will so many lines be on my chart. But one thing I noticed is that we got more entry opportunities, because this level of support, which was established at the end of last week, was broken and retested right here. Break of support, future resistance, entry opportunity. Also, I notice another one right here. Break of support, future resistance. Also, same story again. Support, break, future resistance. Like, Euro been giving these pips, guys. Giving. Simplicity. Only looking at the market from a support and resistance standpoint. There are many other tools and techniques and what should I say, contributing factors that would support these trades. I know, but Backtest Fridays, simplicity, only support and resistance. Alright, let's jump over to NU. This shit fell out of the sky. This was a cash rate decision. I think NZD decided to keep their currency at their cash rate at 1.75. Let me check that. See if I'm right. Let's go to current week. Last week NZD. Yeah, they kept their cash rate at 1.75, which is that's not good for currency. See me? We want interest rates to go up. We want to get more interest on our money. So looking at NZD from the H4 time frame, we identify some form of trend line right here. Like, let's get this down to have it more accurate with interaction with current price action. Yeah, I prefer this one. This one looks more. This one looks better in terms of accuracy. So moving to the H1, as mentioned on Euro USD, we see an establishment of a level of resistance right here, right here, and right here. But before we even get here, there was a move that was being made up last week. A setup. This is the first setup of the week I'm seeing right here. Right? Minor break and retest of trend line. Let me get this out of the way for y'all so you can see it. Let me tell you if you see it. Yeah, a nice minor break and retest of trend line along right here. Accuracy, always about accuracy. Yeah, so the market broke this trend line, retested it along with this trend line that's right here. Interaction 1. If I adjusted it, could have got 2, 3, and all of right here is basically interactions. Let me adjust this so you can see it better. Yeah, that looks better. So 1, 2, 3, 4, 5, 6, 7, 8. Lots of rejections of this trend line. So a break of this level of resistance. Like, trend lines are the levels of resistance too. Like, resistance on this side, support on this side, right? So break of resistance, future support, also retesting this level of support. Buyers in the market, you could have took an entry at the close of this candle. We know that we have resistance up here, so we would look to exit our trades along this level. TP1 would be around right here, TP2 around right here, and ultimately we wouldn't be looking to really go long in a situation like this because we are dabbling with a lot of major resistance all along this area. We don't want to buy into high time frame resistance, like, but from taking advantage of simple setup standpoint, this would be a good trade. Probably put your stops on, like, give it a, it's NZD USD. This pair is as slow as Aussie, so give yourself like a conservative like 20 pips. It didn't even have to be that much, but quick 40 pips. But the main move that happened this week was all of this right here. Let's get this. So market started opened somewhere around here and gave us this level of resistance. We see some form of rejections on the bullish standpoint along with this area. So we can identify that this is a past level of support acting as a future level of resistance, right? Simplicity. 1 rejection, 2 rejection, 3 rejection. We have a level of support right here also, which was broken, right? Level of support, broken level of support. Moving to the low time frame, let's analyze what's really happening here to fine tune our entries and get those sniper week entries that we love to get. Yeah, so we see some form of trend line right here. Yeah, some form of support acting along right here, right? We see a level of support right along the H4 line. This was the H4 line that we got from the previous level of support, which was broken, acting as resistance. Yeah, so look right along here, right along right there. See that? See that? That's telling us that there's some form of buyers along this area, right? So price broke this clean. 1 retest right there, right? This is the M15 time frame, so we could enter off the close. We could easily enter off the close of this candlestick formation right here. This bearish variation right here could easily enter off that. Right, the close of that. Let's get this highlight. Could have taken entry opportunities along right there. entry opportunities right there. Go to the H1 time frame. Could have put stops right above the previous highs over here. Level of resistance, carry this cross. And in this case, this was a massive drop. Like, if you're manually maintaining your order, you would have been in this order until about right here. Yeah, you'd close out right there because of the break of this level of resistance. That shows that some form of transition within the market. But from a conservative standpoint, this would be TP1, TP2 somewhere along this area, and TP3 somewhere over there. Alright, let me move this. TP2, TP3. So TP1, 2, and TP3. Simplicity, guys, simplicity. TP1, TP2, TP3. And if you're manually maintaining the order, you get out somewhere along there. Sorry about that. Alright. So that's NZD USD simple trades, only looking at the market from a support and resistance standpoint. Now, GBP JPY, this is bay. Full facts. This pair is bay. Like, this is my favorite pair, right? So, looking at it from the daily standpoint, we see that we have some form of support along right here. Resistance, well, there is no major resistance. Only last level of major resistance on the daily standpoint was up there. So looking at the H4 time frame, we can see that we had an incredible bearish push within the market last week. So ideally it would be good for us to analyze what really happened there, and the only way to analyze is to really taking the line chart into consideration. So we see the market making lower lows, lower highs, lower lows, lower highs, lower lows, and highs along right there. Right? So information that we need to trade GBP JPY from a informed and what should I say? Informed and I can't even think of a word to describe this trade, but like, to trade this from a very technical standpoint in terms of the trend, we need this information, right? So this is the level that we are interested with on the H4 time frame. Scrolling down to the H1 time frame, we see that there is a push right here originating from this point at a rejection right here. Alright, so we identified that H1 level of resistance. Resistance was made right here and confirmed as resistance right along this path right here. Right, so the week started here. Immediately, guys, we see price fall at the starting of the week to some form of support, which is acting along this area. Support, support, all of right here acting as some form of support. Basically, support is all along this area within the market. Support, yeah. So we would be able to take advantage of this sell, right? Simple sells. I'm sure if we analyze this on the low time frame, we're going to see some form of transition within the market. All right, let's go look for it. So analyzing this from the low time frame, the M15 time frame, simple, simplicity. Level of support that was broken, and we got this nice bearish formation along right there. I'm sure if we go to lower time frames, we see this picture much better. All right, let's find it. Let's find it. Here we go. Even a better picture. We identify some form of support right here. Broken support, future resistance. At the close of this candle, if you just want to take a quick trade within the market, entries along the close of that candle, stops above the level of resistance, take profit at the level of support. Easy 80 pips, quick and easy, right? Let's continue. So we identify one trade opportunity that we could capitalize on. Now, this is the tricky part. The market is dynamic and the market is adaptive, and I won't get into this too much, but in order for there to be big sells, there have to be buys. The only way you can have a sell if someone is buying, the only way you can have a buy is if someone is selling. Like, wrap your heads around that concept. Research it if you want, but it is key information within the market, right? So, market open here, identified one sell, right? Market established a H1 level of resistance all along right here, right? Simplicity, I've been saying it all day. Break of resistance, future support, break of support, future resistance. That's all we're looking at the market from in terms of this video series that I'm doing. Support and resistance, nothing else, right? So we identify that we have some form of H4 resistance along right here from the line chart. H4 resistance, right? Oh, oopsie. How we get this out? There we go. My problems. Alright. So H4 resistance is along this level. We see our first interaction right here with the resistance, and it is confirmed that this resistance is indeed present by this huge bearish candle. Look at that. Completely taking out 16 hours of previous price action, right? Yeah. But we're in observation mode. We could have took a sell from this point because, yeah, we know our H4 resistance. So we drop down to the low time frame and look at the information the market is presenting us. The lower the time frame, the more accurate the information may be. Every time frame has their own story. Every time frame has their own story, guys. So the first sell of this area would actually come from within this box with a level of support. Let me get rid of this line, may confuse you guys. So we identify a level of support right here, which was broken right along here. This is the area that gave the push to break this level of support. That means we have a concentration of sellers all along this area. Let's use excess supply. Wait, we ain't even supposed to go into that. Alright, so we have a concentration of sellers all along this area, with this level giving a push to break this level of support, right? So the market basically returned all the way back up to where it gave that push, right? We see some bearish momentum. Market tried to go bullish, but the bears took advantage. Market tried to go bullish again, but the bears really took advantage of this time. Using candlestick analysis, this alone tells you that there's a perfect trade within this area. And guys, here's something I personally do. For example, if I'm using a 0.10 on a NZD USD or a Euro USD, I would not be using that same 0.10 on Gbpjpy. Reasoning is because where I could use a conventional 30 pip stop loss, that wouldn't be very feasible in this situation. So for Gbpjpy, I tend to use 40 pips, anywhere from 40 to 50 pips with adjusted risk. Right? So entries along right there. We're looking for a first take profit, which would be along this area. Our second TP would be somewhere along this area. I think I should use a different color for TPs. Alright, let's use a different color. Here's a nice little color. See me? Moving forward, that's take profit color. Alright, so our first TP would be somewhere around here. Second TP down here. Third TP would be even further down. Let's see what the H1 is giving us in terms of take profit. Third TP would be somewhere along this area of this level of support that we would have. But unfortunately, the market stalled along this area because trading is a battle between buyers and sellers. And there's two pictures in play. Your responsibility as a trader is to find out what side of the battlefield you would like to be on, right? So we have H4 resistance right here. Let me go over this real quick. Alright, let me change this to black because that's not TP. Right? We have H4 resistance right here, but we also have this story playing out, a break of support turned resistance. So they're going to be buyers along here. Some people are going to want to buy right here, but I personally don't feel comfortable buying into a sell zone. I don't want to buy into an area I want to look to take the market short. Like classic setup, classic setup, right? So off of the failed attempts that was made right here, we start to identify a little picture. Let me clean some of this up for you guys. I don't want you guys to get confused in all this noise. Clean charts, guys. Clean charts. Clean charts. Clean charts. Alright? Clean charts. Say it after me, guys. Clean charts. You don't need all those squiggly lines. Right? So we have a picture that is being painted right here. We have some form of resistance acting along right here in the form of a trend line. Acted as resistance, acted as resistance. Now, from an observative standpoint, we know that buyers are looking to buy this break of resistance as support, and we also know that buyers are looking to take advantage of this low time frame trend line opportunity break and retest. Like if you're looking at the market from the other side of the battlefield, we are going to do this. We're going to take out our Fibonacci. We have something going on right here. We had a break of support right here, a break of structure as they call it. One all the way up here, and we have a nice 61.8% retrace. You're gonna buy, but that's not the side of the battlefield I want to be on. Yep. So we know that buyers are being induced into the market, and in order for you to have sells, people have to be buying. In order for you to buy, people have to be selling. Always remember that. So this entire area right here is the area we're looking to capitalize on sells from. Same from this region that we took the first sell, which did not give us the ideal take profits we would want. The market returned to that area, forming something similar to a double. Well, not similar, it formed a double top. Sorry, yeah, formed a double top. See that? Double top formation. Simplicity. Alright? Let's get rid of these. All of these. Yeah, let's get rid of all those. So the market formed a double top situation along right there. So first trade was taken here, looking to take a second trade along this area at the break of this trend line. Yeah, see buyers coming. We're looking to take a trade along right here now. Alright, so let's get this out of the way. Let's get this out of the way. 1 second. Alright, we're looking for him to take some form of trade along this area. So identify all of this area. We want to look what is happening on the low time frame for all of this area. So we'll go into the low time frame, and we see price came back up to this area when it broke the trend line, came back down to here at the retest of the trend line, and price rallied. Absolutely rallied. Got some form of trend line opportunity right here where we see that buyers try to capitalize on it to continue that rally. But as I said, guys, it is a battle between buyers and sellers, and look at the information presented to us along here. We have a level of support that was broken and confirmed as a level of resistance by this candlestick formation right there. Let's highlight that so you guys can see that candlestick formation right here. That's the sweet spot. Well, from a support and resistance standpoint, that's the sweet spot. So we can do entries along the close of this candle. We can use our 45 pips stop loss with adjusted risk, and we look to take advantage of this H4 sell zone all the way down to the H1 level of support. Nice, easy trade. 45 pips stop to 182 pips reward. Would be on one right here. Yeah. Let me get these TPs out. So this would basically be TP1 for the trade, because the market could easily stall right here again. So that would be TP1. This would be TP2, and ultimately this area along right here, that area of support would be TP3. So anywhere along here, nice, clean, easy trades just by a level of resistance. Alright, so thank you for tuning in to the first episode of this little series called Backtest Fridays. Follow me on Instagram at yardpips. Oh, forgot the S. Whoopsie. Yeah, yardpips. And as always, big up on yourself. Have a good week. I suck at typing. Big ups. Alright, see you guys.